Hey guys, it's Andy from Magoo Investing. Today I'm going to be talking about support and resistance lines and how to spot them on the charts and use them in your future trades. So before we get started, I'm just going to assume that you understand how to read a chart and the candles, and if you have not, up on the screen right now will be the last video that I put out talking about how to read the candles, and I would recommend using that as a quick refresher if you're not super confident with it. Support and resistance are two terms that are commonly used in the investing world to talk about a stock chart. You'll often hear me referring to them in past videos and probably in future videos. So let's get right into it. What are support and resistance lines, and how can you use them effectively in your trading? As I mentioned in the last video, candles are a good way of kind of understanding how the stock is reacting to a certain price level. And so the longer you have with the wicks, the more likely that it is that the stock is having problems getting through that level. In the case of a support, as the share price falls, you're going to reach a level where the price is going to get so low that the buyers are going to come back in more aggressively. And so when you have increased buying compared to normal, the stock price is going to go up. Think about it kind of if you were buying, or if you're looking to buy a computer. If the current price is $1,000 and you thought that was too much, you're probably not going to buy it right now. But if you come back a couple weeks from now, something happened, now it's at $700, maybe you'd be more likely to buy it. And that's kind of the same thing that happens with support. And so the price gets so low that people think it's a great deal, the buying increases and the stock price goes back up. So you kind of see a V in the chart where it comes down, reaches a level, and then bounces back up off of that. So the same thing happens with resistance levels, except for it's on the upside. So say you're holding something and it increases in value to the point where you don't think it could possibly go any higher. This is what people see with resistance levels. They see on the charts that it's had problems breaking a certain level, and when it gets close to or at that level, they sell their shares. And so when a bunch of people are selling their shares and it's unusually high, the price of the stock goes down. And so when you have support, it goes down and then bounces. When you have resistance, it's going to go up, hit the top, and then come back down. All right, so I'm going to be using my incredible Photoshop skills to kind of give you a super basic chart so that you can kind of see what you're looking for before we go into the actual charts. All right, so here we are with a stock, company A, we'll just call it. And so currently it's at $50. We don't have any other information to go off of, so we're going to wait for 2 weeks later. 2 weeks later, we figure out that the stock went from 50 up to 100, down to 25, and then back to 50. And so based off of this chart is 25 and 100 a support and resistance level for this company. The answer is no. The important part to remember with resistance and support is that it needs to be a line. And with only 1 point, you cannot create a line. I see this a lot in some of the chat rooms that I'm in. People see a stock goes up to a certain level and then comes back down, and they want to mark that as a support or resistance. And so you need multiple points to be making a line, and the more points that there are at that certain level, the stronger that support and resistance level is. So let's go back to the stock A chart. And so say we come back a month later, it has some more action, it hit 100 a couple times, it hit 25 a couple times. Now we can pretty much say that that is a support and resistance for the future. So now that we've kind of talked about the basics of the support and resistance, let's head over to the computer and we'll take a look at some real life examples and how you can actually use these in your trades going forward. All right, so here we are in TD Ameritrade, and I'm going to go over just some real life examples of support and resistance. I'm going to show you 3 stocks. 2 of them are going to be with the standard support and resistance, and the third is going to be a variation of the support and resistance. And so the way that I found all these stocks is I went to finviz.com, great stock screener, and I came up to Signal, and I went to, where is it? It's horizontal support and resistance. I found it there, and then for the variation, I found the channel up. So the first stock we're going to be looking at is ticker IJT, something I've never heard of, but it doesn't really matter. I'm just trying to show what it looks like in real life. So when we zoom in on here, we can see that this top area right here has gotten touched a lot of times and has not been broken. And as I mentioned, the more times that a price level gets reached and then rejected, the stronger the price level is. So here we have a very strong resistance around 187, and then down here you could maybe draw one in the 170 area. Not as strong because it hasn't been as exact, but in this example the top resistance area is the one that I'm showing off. The second example today is ticker CBT, and so looking at this charts I have an idea where I'm going to be looking. So we're going to zoom in over here, and this is one of the more perfect support and resistance I've ever seen. So it comes down over here on the way down, and it has bounced off of this area so many times. This is a very strong resistance level, and then even on the bottom, it has gotten tested at least 3 times. So we have a support around the $40 mark, and then we also have a resistance around the $47.50 mark. So this is a very easy play to look at. You're just trying to buy when it's down by the support and sell when it gets up to the resistance. And if that breaks to the upside and you're going long, great trade for you. If it breaks the support and heads down, that's when you get out of it. And finally, for the variation, I'm going to be showing off FIXD. And so the variation I'm going to be showing off is the channel. This can be a channel up or channel down. I prefer to be trading the channel ups because I like to be long in stocks and want them to be going up instead of down. So from this area, you have some support and resistance over here. Not what I'm looking at. We're going to head over here. When you're picking a channel, you're trying to look for the last or the lowest point before the direction changed. So we're going to go to this low right here, and we're just going to draw it up to have the most amount of price action touching our line. So here we have at least 3, maybe 4 times where it touches this line, so that looks good there. And then we're going to draw it out, and it's not as perfect on the top, but it's just kind of giving us a general trend that we're going to be playing. One of the problems with the channel up is that it's not as exact. This is just kind of some general guidelines that you can be playing in the future and kind of see what maybe the upper bounds of your trade could be. Support and resistance are probably the most common and most widely used form of technical analysis for traders. It's pretty simple, just kind of look at a chart, see where it's gone in the past, draw some lines, and then make trades based off of that. From this video, you should now be able to kind of look at your charts, pick out support and resistance, and use them in your trades. But it's important to remember that support and resistance isn't only just a horizontal line. It can also be a channel. So you have the upward and downward channels that we talked about a little bit on the computer. And those are some of my favorite ones to trade, but it's a little more advanced. So if you're just starting out with trading, I would highly recommend just using a basic support and resistance and kind of go off of that. Since it's the most common source of technical analysis, a lot of people are also playing that. So it's the most reliable and it's probably the easiest to spot. Hopefully you guys learned something from this video. If you have any questions or a topic you'd like me to discuss in an upcoming video, please leave that in the comments down below and I'd love to talk about it. Thanks for watching you guys, and I'll see you guys in the next video.